Good afternoon, everyone, and welcome to this session of the London Financial Regulation Seminar, which, as most of you would know, is an intercollegiate and interdisciplinary group of experts on financial regulation, which I have the great pleasure of leading, and I have also the great pleasure of having Dr. Daniele D'Alvia as my deputy in running this series. And today we are very honored and privileged to have both a very distinguished speaker and a very distinguished discussant. So today, July 3rd, Professor Takashi Kubota, who from Waseda University of Tokyo in Japan, will discuss his forthcoming monograph on the legal aspect of money with an emphasis on CBDCs and crypto-assets in Japan. And following his presentation, Professor Sir William Blair, who is a professor of law and ethics, financial law and ethics at CCLS, Queen Mary University of London, will provide some discussion. And then we will open to Q&A. In the Q&A, I will invite people to put questions. You can do it throughout the presentation in the chat feature, or just raise your hand when the time for Q&A comes, and I will moderate together with Daniel the discussion. Professor Takashi Kubota is a visiting professor now at the Center for Commercial Law Studies. Actually, he's working together with me, and I'm delighted that as part of his research stay with us, he agreed to do this seminar, since it's a great honor for CCLS to have people like you have the desire to associate with us. Takashi Kubota has worked for the Bank of Japan for 8 years as a legal expert and an economist. So he knows issues of central banking and public digital money extremely well. And he has also lectured as an associate professor at Nagoya University before joining as full-time professor at Waseda University. He is the author of several research papers and books on the issue of payment systems and theories of money. So he will provide first a broad legal analysis of money from a Japanese perspective, and focusing on constitutional issues that the current financial Japanese system poses in relation to the implementation of CBDC. And then we'll explore the differences between the economic and legal theories of money, and we'll also provide an analysis of the current payment system in Japan and technical pitfalls of digital currencies, including CBDC. I have to say that when we agreed that he would do the presentation today, we still did not have the proposal for a regulation on a digital euro, which very timely was published by the European Commission on Wednesday, the 28th of June, together with a whole legislative package for the introduction of a digital euro. And of course, the legislative process in the EU is complex. It just shows that central banks around the world, as well as obviously the treasuries and ministries of finance, who have, because of legitimacy considerations, a very important role in the discussion of these matters, as well as parliaments or discussing these issues. So the presentation is extremely timely. It was very timely when we agreed, even more timely, considering that now we also have on the table a very specific proposal for the introduction of a digital euro, and also the Bank of England and HMT put together a documented consultation paper on the digital pound, as well as technology paper published by the bank, and the bank and the regulatory authorities in the UK are also looking into that. So without further ado, conscious of time, because we want to do everything within 1 hour, which is, we figured out the magic time to do a proper webinar and keep everyone's attention, I will mute myself and I will give the floor with thanks to Professor Takashi Kubota, and he will himself slide through his own presentation, as he's got the hosting rights. So thank you very much again for being with us and for making the presentation.
Many thanks, Rosa. And I will start presentation. And thank you for the participants to come to my seminar, and even from Tokyo or even from all over the world. And today's topic is CBDC and crypto-assets, a Japanese perspective. And my contents is today is 3 parts. My points in short. So adapting law to digitalized world and central bank accountability on CBDC. And part one, situation in Japan, and part two, legal perspectives of money and CBDC, because I'm writing a book in Japanese and the essence of it. So let's go to the main points in short. There are 2 points, adapting the changing money. So money is changing up to now. So the beginning is recorded debt, such as KIP, like this rope, and goods or barter trade or tangible cash, promissory notes, bank transfer, credit cards, and now intangible digital currency. And to the future is the CBDCs, fashionable, or crypto-assets or stable coins. Though money and payments is an important source of state power, government cannot control what the people use for payment, even if they define legal tender. So then how should we adapt law to social usage of money and to protect monetary sovereignty? That's my first concern. And the second concern is central bank independence and accountability. So regarding the accountability of the CBDCs, the BOJ, Bank of Japan, have no plan to do consultation to the general people, only to expert people. They should do so, I think, as the US did or UK did or New Zealand did. So the central bank independence does not mean central bank immunity. So how to motivate central banks to increase accountability is my concern. And recently, the central bank independence is beginning to be reconsidered. Some criticism is made about quantitative easing. It's a deviation from traditional rule-based monetary policy. And some economists say that it should be subject to clear accountability and transparency. And the Japanese law is 1997 reformed to respect central bank independence. For example, Article 3 and 5 respect the BOJ independence, and the BOJ has only obligation to make efforts. And the BOJ governor and vice governor cannot be dismissed due to policy changes. It changed after 1997, but and before, the government can dismiss the BOJ governor and vice governor. And the penalty of accountability is quite low, such as, in the middle, most only 2,740 pounds. It's very trivial thing. So there is substantially no penalty for the lack of accountability. Now let's move on to the part one, situation in Japan. These stats are from the current ongoing Japanese government committee on CBDC. Japan is a cash society. The cashless is increasing in Japan, but still cash is much used, 36% cashless. And no financial exclusion. And more than 99% of Japanese have bank accounts. It's very easy to open accounts. Say that if you deposit just £1, everyone can open a bank account in Japan. So few counterfeit cash compared with euro and pound. We'll show the stats in later. And 85% Japanese people that have never heard of CBDCs. And emerging countries adopt CBDC for the purpose of financial inclusion, but the financial inclusion is Japan has already attained. So the first stat is proportion of individual cashless. And the cashless is moving, but still only 36%. And trends in the circulation of cash. The top red line in Japan and the bottom blue line is UK. So the Japan has much more, Japanese people use much more cash. And the counterfeit banknotes is like this. So much lower than euro and British pound. And the awareness of CBDC is only 4.57% of the Japanese people have heard about it and know the specifics. and have heard about it, but don't know the specifics is only 10.3%. And for the rest, 85% have not ever heard of CBDC, and of course, do not know the specifics. On the other hand, CBDC plan in Japan is, although there are no plans officially to issue CBDC at the moment, it is important to be well prepared. And the former governor said that the CBDC must and will happen in Japan in March this year. And the CBDC issuance is indirect type of issuance via private banks. And the CBDC aims its coexistence with banks. And the BOJ will limit the maximum amount and interest rates of holding and trading CBDCs. And pilot experience started in April this year as account type. And the legal analysis is mainly done as account type. And however, the ledger model has not been decided yet. And another type is token type. And the token type can possibly be adopted, but probably account type will be adopted. And the BOJ established a CBDC forum to discuss with private retail payment providers, with experts. But as stated above, no public consultation like UK, US, New Zealand has been even planned yet. Many challenges. So the merits is efficient and accepted by the people. But so far, ECNY, the Chinese renminbi, digital renminbi seems unpopular. We will see the next slide. And the robust security. Can central banks assure it perfectly, or financial inclusion, but still side effect, such as financial exclusion of elder and poor people, or financial stability, significant risk if exists if hacked, or demerits is protection of personal info or excessive government control, and threat is, for example, foreign laws, even foreign laws such as US Cloud Act or Chinese Cybersecurity Act of collecting foreign individual personal information, or foreign attacks such as national hacking by North Korea, China, and Russia. So the countermeasures, one of the countermeasures can be a technical anonymization. And we propose our SK4SC system. And there are technical glitch, also still remaining technical glitch, such as developing post-quantum cryptology. So let's see the Chinese ECNY. This is the stats. And say that at the end of 2021, the individual accounts is 26,100. But about half a year later, the cumulative transaction is much the same, 26,400. That means that the account holders did only one transaction of this ECNY and not more. So the ECNY circulation so far is much smaller than Alipay, and people do not seem to use it so frequently. And the predicting future is not easy. So that there are the statements that in the Japanese papers, there are not so many introduced, but in Australia, I got some information, or in the United States, like this. So in March this year, the Federal Reserve Bank of Australia, the governor, Lowy, implicitly looked backward in introducing retail CBDCs. Or some experts argue that even if CBDCs introduced only for large transactions, once introduced, the distinction from small transactions will become hazy. Or a US congressman sees CBDC as a potential dangerous, and he proposed the CBDC Anti-Surveillance Act, or like that. There is a proverb in Japan that two minds are better than one. So under this uncertain situation, I highly evaluate the UK regulatory style of collecting public opinions widely and freely, while Japanese style is limiting discussions among few limited experts. So let's move on to the part 2, legal perspectives of money and CBDC. And the CBDC is under development. And ECNY will be soon, or digital euro, Bitcoin, or digital yen, or digital lala. will be estimated as soon to realize it. However, financial literacy is still low. In Japan, only 4.7% know CBDC or hard CBDC. Retail CBDC has more challenges, such as excessive government control, than wholesale CBDC. Though US, UK, and New Zealand did public consultation, Japan has no plan. Why are people left behind? The next slide, I show some hypos. Why are the people left behind? Hypo 1, too technical and too uncertain to account for the people. However, the Bank of Japan has legal accountability to the public for its currency policy and its decision process by the BOJ Act Article 3, Paragraph 2. And Hypo 2, geopolitical and sensitive nature. And see the sensitive nature, 2 slides. However, the same is true of the UK, US, or New Zealand. And Hypo 3 is, that is my thread, is adverse effects of existing academic classifications. And CBDC and digital payment issue are classified as highly technical events in the field of financial theory of economics, in which constitutional law ideas such as democracy, as well as international or domestic law analysis, are easily discarded under the name of central bank independence. But it does not mean immunity. So on the other hand, financial law tends to focus only on the detailed interpretation of existing laws. So let's look briefly at the geopolitical estimates. As the global CBDC progresses, it is expected to bring about changes in the current US monetary hegemony, leading to a bipolarization with China or a tripolarization with Europe and China. And this can affect current financial sanctions. Though they are not very scientific, but still the serious central bankers or serious English literature proposing or just assisting some bipolarization or tripolarization will happen in the future. So for example, US versus China is advocated by Hungarian central bankers. And the US versus China versus EU is an English researcher, Michael Lloyd, at the UK Global Policy Institute, predicts that in addition to US-China confrontation, the EU is also moving against the US. This is only frequently said also in Japan. And Japan also have some strategic or sensitive views. Please look at the political sensitiveness in the middle in the global CBDC competition against China. So the ruling party, a politician Hideki Murai, he is from the Ministry of Finance of Japan, noted in July 2021 that mutual compatibility with CBDC issued in Europe and the US will be important, and that we must ensure that China does not take over the technology standard. So some politicians or the government, even in Japan, some strong rivalry against China. And second, democratic process is needed. And the Bank of Japan has accountability to the general public, as I said before. And the Rosa students, Professor Will Bateman at the Australia National University was my host professor before coming to London. And he questions the existing views from constitutional law. I will show you in the next slide. And also the financial education has not touched on digital currencies. Social enlightenment, such as in the Japanese Bankers Association, is sometimes very misleading, such as misleading of the blockchain as the same as DLT, but the blockchain is one of the DLT. And the conclusion will be the concept of central bank independence should be reshaped to constitutionally position central bank as an independent authority and democratically controlled through transparency and accountability. So let's move on to Bateman more in detail. he kindly gave me the draft, but the monetary state will be soon published in this year. And according to the first chapter, the monetary authority is the fourth great power of the constitutional state. And the fourth great power of the state has come to occupy a uniquely illiberal status, such as a central bank independence in the structure of constitutional government. And the government, the economic studies, functional definitions, chief weakness is its omission of state power in determining the functions of money. No equilibrium has been reached between those polarities of economic and constitutional power. And the judiciary decides that the decision of monetary authorities are too complex and economically momentous to be reviewed by a judicial body. So likewise, the central bank substantially obtained some immunity is the current status. And the jurisprudence in economics mainly originated from commodity or law or debt by economics, while by the jurisprudence, law by such as FMM or social acceptance is a prevailing view, and financial institutions, sans the Vicuña, by the Zimmerman. He seems to be also a student of Rosa in 2013. And monetary sovereignty, a nominal concept, I will see detail in data, based on traditional sovereign states, does not fit the current international finance. Proposed revisions by Zimmerman is hybrid of hard and soft law, and Emilio Kluster says that monetary governance, including offshore and shadow banking, should be thought. But still, we need some dispute resolution norms for the future. So I propose that the G20 consensus on processing disputes on harming monetary sovereignty caused by issuing other sovereign currency nominated CBDC, a new type of digitalization. So issuing other sovereign currency, that is impossible, you may think. But actually, the back on the present CBDC, Cambodian's CBDC, actually issues US dollar without US consent. If this is possible, then if China likewise can issue USD or JPY nominated ECNY without consensus, our consents, and change the specifications are larger or more global, there will be a problem. So for details, see later. And we'll touch on the regulation and law on digital assets. The global regulatory landscape is rapidly changing because last year we experienced the FTX failure and also the Terra USD's problem. So the countries such as China, crypto assets is banned in 2021. And Japan and the EU or UK or US, the FATF, the money laundering institution, FATF, asked member countries to adopt registration or license system in 2015. So in the case of Japan, we adopted the registration system. But I think that the registration system and the license system is substantially the same because even in our registration system, there is no case that not all the companies who wish to register as a crypto exchanger can be allowed. Only allowed to register is what the financial the government admits. So Japan admits the registration system by the Funds Payment Act, and we did some frequent reforms. And EU is recently finalized MiCA license system from next year. And the UK also adopted license system, and recently announced that 24-hour consumer cooling off beginning in October this year. And the US is reported to still under reviews. And let's look crypto assets, UK versus Japan, more in detail. First of all is private law, protection in bankruptcy. So in UK, they're protected as property. That is very straightforward. But on the other hand, Japan is not protected as property because we have Article 85 Civil Code, which is from the German tradition and limits property to tangibles. And need legislation to amend Article 85 or to adopt neutral principles to protect priority rights, or it can be protected as trust. We have no constructive trust, but the trust is trust by the contracts, which is regularly required to exchanges. And of course, the UK law is the protection is perfect by the trust too. And the constructive trust without any prior consent is also possible. And the second, crypto assets exchanges. The FCA issued license system, and we have registered system. And the Binance issue, Binance is a foreign and a Hong Kong based, the base is the Cayman based, and the Binance does not follow the foreign financial authorities regulations. And that kind of issue exists in UK and Japan. And the stable coins is under construction of the regulations, both in UK and Japan. So let's move on to the Binance, the overseas monitoring. Binance remained operational in Japan despite a warning from Japanese FSA, Financial Services Agencies, to register with the FSA in March 2018 and June 2021, and still not registered in Japan. The limits of legal execution across national borders have been reported. And also the similar situation can be seen in the UK, US, Germany, Singapore, and Hong Kong. So my question is how to sanction such disobeying crypto exchanges? For example, as a response to severe criticism, Binance has obtained licensing in Italy, Spain, and Dubai, and reported that they started considering to register in Japan. And my answer is, and nobody says that I think that we should adopt a blocking. And though legal solution is slow and ineffective, it is technically feasible to identify and block major crypto exchanges such as Binance to some extent. And the easiest blocking is DNS blocking. It's already adopted in child porno. So weak sanction, but it is enough deterrence for Binance, which cannot change the web addresses so often. And next is UK and Japan transactional laws, the private law things. Under the Simon Gleason and the legal concept of money, Oxford, the UK law, in the UK law, the law does not define what is currency, only the consequences of being considered currency. And the social practice as it defined law, if society treats Bitcoin as a currency, the court will conform the law, conform to the law, or conform as a law. Sorry. The difference from Japanese law is that the Japanese law is not so flexible as the UK, and we have Civil Code Article 85, as I said before. But the UNIDROIT, the principle of digital assets, is currently going on, and they have a solution that we will proceed the unification of private law by defining propriety right protection of the crypto assets. But the propriety right is a broader concept than property. So it contains also the claims. And by protecting rights on digital currencies by analogous legal interpretation of property to the crypto assets. That is a sort of prevailing view of the Japanese scholars, but the Japanese court does not adopt it. And my proposal, one for the domestic law, the protection under bankruptcy in Japan is legislation as a property by specifying legitimate crypto assets. This is simple, but my idea is this. And the legislation as proprietary right, modeled after the unilateral principles, that can be also a possibility. And no legislation, but interpretation as proprietary rights, that can also be possible in Japan, because almost all the Japanese crypto assets have been traded by registered exchanges. So we have much B2C, but no peer-to-peer cryptocurrency transactions, and which are regulated to trust customer assets and will be safe under the bankruptcy even now by the regulations. Even in the case of CBDC, Japanese CBDC will likely be account type and not token type. So the property issue is not so apparent, even if we do not do some legislation. And the Binance and the stable coins as I already said before. Let's move on to the monetary sovereignty. Monetary sovereignty is frequently said, but legally it's not clearly defined. Only source is very nominal. It is indeed a generally accepted principle that a state is entitled to regulate its own currency. This is Serbian loan case, 1929, long time ago, according to the Zimmerman. So under general principle of international law, a state has the power to restrict the use of another state's currency in its territory based on its monetary sovereignty, and without the consent of the currency issuing country, it may constitute a violation of the right to issue currency if the effect on currency issuing country is significant. That is the textbook saying. And Cambodia's BACOM, although the US have not given their permissions, and they provided an electronic payment method in line with the dollarization situation, where 70% of the domestic circulation is in US dollars. So, and there is no credit creation at this time. So thus, the current situation does not violate the international customary law. However, unlike paper USD banknotes, Cambodia can exchange digital USD BACOM as larger or global or with higher interest. So hypo case, JPY version of ECNY. My hypo is China globalized ECNY successfully and provided to offer a large-scale JPY version of ECNY based on its JPY reserves and accounts in China. Is it possible? Impossible, no? I'm sorry, I maybe have grammatical error, but I think it's possible because Napoleon counterfeited Australian currency in 19th century. And in US, the Chinese CBDC Prohibition Act is submitted in February this year. So the extraterritorial application of Japanese laws can be the solution based on protectionism. The crime of currency counterfeiting can be applied extraterritorially. However, the law needs to be revised to accommodate the digital CBDC because it's based on the papers. And even if it's applicable, execution to PBOC in Beijing is difficult. PBOC is Payment Bank of China, the Chinese Central Bank issuing ECNY. And filing with ICJ, International Court of Justice, takes a long time, and domestic crackdown is imperfect, while Japanese version of ECNY can prevail quickly. So I think possible reaction is to disconnect ECNY technically, or to prepare a quick solving soft law mechanism in G20. So my proposal to G20 norm is that the anchor country's authorization is essential. That is the first norm. And should a country translate this norm, the aggrieved country should be able to file a complaint with the Financial Stability Board, FSB, which is the G20 Secretariat. The FSB would then host discussions between both countries. Should talks reach an impasse, G20 member countries may impose a total moratorium on mutual currency conversions with CBDC as a countermeasure against the country that provides another country's currency. Since the aggrieved country would retain the right to decide on whether to file a complaint, countries like US, which has policies tolerating the use of its currency by other countries, would not need to file a complaint. And what if it objects to state Z using its currency, while it is okay that state X and Y uses its currency? In order to facilitate such situations, the detailed norm should be clearly outlined. And yeah, that is the Japanese case. We talk, economists talk very much on the Web3 promotions, but sometimes they lack some legal sense. And 5 is quantum computing, the technical pitfalls, the quantum computing. If the quantum computing is invented, then the existing cryptology can be easily broken. That is not a dream story. Say that the US NIST is an official institution, clearly says that there is a risk and we need some quantum resistant cryptology. And part 6 is reading the Payoff issued in published in 2021. This is, I think, you may have read it because it's English bestseller, but it's also the Japanese bestseller too. And though authors mistake that the concept of settlement is from the legal concept, legal jurisprudence, but it's not. But however, the rest is very agreeable, such as regulators seem to control settlements, but in fact they have no perfect control over them. Or in settlements, even short-term ones, it is difficult to predict. Or the essence of settlement is risk, liquidity, and law and custom. And there is no dedicated department to combat cyber attacks on payment systems. And that are all agreeable for me. And proposing a technical strategy is the privacy enhancing technologies is needed, and the key is to make it anonymous. And anonymization technology solves various legal issues. And okay, that's the image of the SK4SC, which we proposed. So please look at this, the local CA before the all information is disclosed to local CA. But after that, not disclosed, but only range proof, such as, for example, if your age is 38, but your age is just show that you are older than 20 and younger than 60. Or like that. And such kind of anonymization can be a solution for the individual information and privacy. And the implication to jurisprudence. Last of this presentation, I seek some other masterpieces on money thinking by, say, that Friedrich Hayek. And he insisted that the competition make ideal currencies and abolishing legal tender he proposed some abolishment of legal tender. But the both I still have opposite opinion. And I think it's still necessary for tax and wages. The legal tender is needed. Or Katsuhiro Iwai is a Japanese famous economist, and expectation to be reviewed as money makes money function. It's partly true for short-term interbank debts, but still, state governability is indispensable to stabilize the currency prices. And Felix Martin, it's a global bestseller in 2013. The money is a transferable credit or social technology or three components: universal economic value, accounting system, and decentralization of transfers, and should be governed by democratic politics instead of central bank independence. And I found it's very the trend of bringing the states back in to the existing economic money. And I totally agree with this movement. And David Orell, he's a historian, and money has a dual nature of number and object. And both credit and commodity currencies have existed in history, and barter never existed in history. So the Japanese law, which stick to 85, the tangibility requirement in the civil code, but it's probably derived from this kind of the misleading assumption of the money has only object and not a number. But it's basically the debt or the number. That changing concept can lead to some our reform of the Civil Code 85. And sociology, and not only economic value, but money can also define social relationship and mechanism. And the law can adapt to it, I think. And okay, the time is up. And thank you for listening. And for all the resumes, I will show you if you like. And thank you very much for listening.
Thank you very much, Takashi, Professor Kubota. This was a wonderful and comprehensive presentation. And I really look forward to the publication of your book. And thank you very much for enlightening us on the complex legal issues that surround the potential issuance of CBDC, as well as the regulation of other digital assets. And your presentation, was very rich in bringing the history of monetary sovereignty, the various theories of money, the various theories of account type, token type, and then coming up with a very innovative and original proposal, soft laws of power involving the G20. It reminded me as I was listening to you that the House of Lords back in 2021 published this report, which was a solution in search of a problem, CBDCs. And, there were elements in your presentation that very much corresponded to that line of thinking, of that inquiry, though I have to say that since the debate has moved on. So without further ado, I'm conscious of time. I will now give the word to my dear friend and colleague at CCLS and in other fora, Professor Sir William Blair, who will be discussing this excellent presentation by Takashi. Bill, the floor is yours.
Well, firstly, Professor Kubota, my congratulations also on a brilliant and perceptive presentation. And you've raised and put into the Japanese context, but also the international context, a lot of the practical problems that have arisen. Listening to your presentation and standing back from it a little bit, and I had the great benefit of having your slides in advance, it occurred to me that your position is one of receptiveness to central bank digital currencies, but also a certain wariness about the consequences and the practicalities. I think, if I may say so, that's a good and sensible place to be. Just picking up in over a few minutes, a few of your points as they struck me. The first is that the success of a central bank digital currency really will depend upon whether people use it. And as you rightly pointed out, that is a matter choice. And you pointed out that the take-up of the digital renminbi had been slow, and but the reason for that is fairly obvious, I think, and you touched on it, and that is that Alipay, as you pointed out, and the other digital systems in China were advanced before other countries caught up, I think, in many ways. But even in the West, with credit card payments and so forth, these have become they've become seamless for the user. I think that's really the point. And so that, I think, is a huge issue. On your issue about central bank accountability and independence, I think you made some very valid points there. Consultation is important. Professor Lastra mentioned the recent proposal as regards the digital euro. The Bank of England produced a good consultation paper back in February, which got to grips with a lot of the practical issues I felt. But just to go back to the question of what would one be consulting about, I think there's a lot of the technical issues would be really issues for experts perhaps, but I mean the big issues for the general population might be, for example, in an aging society, which you have in Japan, and you're not unique in that in any way. How would changing technology affect people who presently are not financially excluded? Might they become financially excluded on age grounds? And then you raised very effectively what I think is an absolutely crucial point. You raised in the context of, as you put it, post-quantum cryptography. Now, of course, this applies to everything. It doesn't just apply to digital currencies. It applies right across the board. But if you add to that cyber attacks, which you mentioned, and you add to that just system breakdown, it happens. It probably will happen more and more. I mean, you've got to be very careful, I think, that you don't get to a point where there are kind of interludes where money doesn't work. Although it can fairly be said that in a way we're there already, because the fact is that physical cash couldn't make up for and what I call a kind of interlude problem. On your point on monetary sovereignty, you raised a really interesting question about, and you put it into a particular context, and you asked whether, say, take the example of China because that's the example you gave, but a country that is very well advanced in CBDC could decide, well, if we've got very large reserves of JPY, we can use those for to back a Chinese version of a Japanese digital currency, and what the consequences of that would be. I mean, I think probably that will be unlikely as between big players, because it would be seen as an infringement of monetary sovereignty. But you're quite right that in a sense monetary sovereignty, what we regard as monetary sovereignty, has not kept up with technology. You're absolutely right about that. And your proposal for having some means of dealing with what would be a problem, I think, were well taken. On the subject of property, whether it's property or not, I think that I know the case you mean, and I think it was a decision of the Tokyo District Court on the failure of a system. I can't remember exactly, but certainly we looked at the Japanese law when we were considering rights of property in this country. I think so far as CBDCs are concerned, that any problem could probably be relatively easily dealt with in legislation. rights of property as such, I wouldn't have thought would be a real roadblock for CBDC. But I think you're right when you emphasize the importance of legal tender. I think that must be right, because after all, the idea of this technological experiment is to, if I can put it this way, to mimic money in the old sense, not as bank money, but as central bank money, as fiat money. And for that, I agree with you. I think legal tender is important. There's only one other point I'd like to make, and it's really a question to you. And I don't know what the answer to this is, but I think it's important. When you think of Bitcoin, which of course has nothing whatever really to do with CBDC, it's a completely different concept, a completely different debate. But nevertheless, it does use a huge amount of energy. Because the cryptography uses a huge amount of energy. Now, that doesn't necessarily apply, I don't think, to CBDCs, but just the accumulation of data with a CBDC that was being used, growing use, because after all, every single transaction will generate data. I mean, you have to keep that data. It's kept in data storage facilities, which are taking up an increasing amount of energy worldwide. And so I guess there is that further question, and I don't know what the answer to it is. Since we've got working systems which take up a lot of energy, do we need another one? And is there an environmental cost that we need to take into account? And that's a question I would have for you. But generally, I completely agree with your overall approach. I suspect that having come this far, they will now go quite a bit further. But that will have, if they do, that really will have big potential consequences for our existing payment providers, mainly in the form of banks. They're going to have to make up the loss of income from somewhere. But thank you so much for a really excellent presentation. And as Professor Lastra said, we greatly look forward to the book.
Thank you very much for valuable comments.
Thank you. Takashi, would you like to have just 1 minute to respond before I take the floor to other questions and answers?
Okay, yeah, with pleasure, yes.
So would you like to respond to Bill Blair?
Respond, sorry. Sorry for my English. Yeah. Yes, the Bill's comments are very instructive, and especially for the quantum computer program already exists in this current system. I totally agree with you. And the bigger issue or bigger pictures, say that the environment issue or some energy issue or some crisis management issues are so connected together. So we need to say that the whole picture is so complicated, but we need to find some starting point to consider. And but at the same time, say that for example, in Japan, we easily tend to think that digitalization is the answer, and let's move on to the Web3. And that is not a simple. That is not simple like that. And for say that the crisis management, cash should be kept for the crisis management. If all the electric power is gone, such as some wards or something. And then we need some paper money, which is not affected by the electric power, is needed to make the economics going on. So I think we need to look some the whole picture and not easily disregard cash is the answer. That I think.
Thank you very much. And we have now, sorry, excuse my voice. We have now two questions. I will take the two and then you can answer. One from Daniele D'Alvia, and the other from someone you know very well, Fernando Barrio. Okay, first Daniel and then Fernando.
Thank you very much, and thanks, Professor Kubota, for a terrific presentation. I really enjoyed it. Probably my question is more about the functions of CBDCs, and so why we need CBDCs, if we need CBDCs. So in some way, for example, you were touching upon stable coins. So for example, I imagine if there is an hegemonic stable coin, like could be Libra of Facebook, can a CBDC be a sort of answer to this kind of problems? And also, in your view, stable coins, what is the future of stable coins, especially after Silicon Valley Bank, where one of the major depositor was the stable coin provider for 3.3 billion, and effectively then the bank collapsed. So essentially this kind of movement then in interest rate, if you are not a retail depositor and you are a qualified investor in some way, you are very sensitive to these matters. So those are the questions that I wanted to ask you, if you have a point of view in this regard. Thank you very much.
Okay, thank you very much. So the first point is that why the CBDC didn't need it, and the second point is about stablecoin, right? So the first, I think the answer will be changed from country to country. Say that in Japan, it's a cash society, and the stable coins is actually the stable coins is banned in Japan, or banned to or not allowed to deal by the Japanese domestic exchanges so far. So the first point that the CBDC is needed in Japan or not is for the wholesale. Yeah, it is very important, because for example, the wholesale delivery versus payment, such as the interbank payment and funds payment and interbank the securities delivery. If the interbank payment is changed to CBDCs, it is the DVP should be faster, is set in among the Japanese bankers. So it is very welcome, and nobody is so much protested. But on the other hand, the retail CBDC, we don't have the financial exclusion program, and we already have some electric payments. So why we need to adopt some retail CBDC? So we still need it because to fight against China. That is one reason, or to follow the US or European, the more advanced moves of the business, and that may be the reason. And for the stable coins is that we have been taking a very prudent approach. So so far, we do not trust the stable coins so much rather than the UK or some other regulators. So I personally think that for Japan, based on this current situation, the prudent approach is the right answer for us. But for the UK or for the Europeans, say that the UK wants to be the hub of the cryptos, then taking some risk can be a chance. But for the latecomer Japan is not taking too much risk is not very good idea, I think. Yeah, that's all. It's okay.
Thank you. Fernando, you have a question.
Yes. Hello, Professor, again. For those of you who don't know, Rosa was referring to the fact that Professor Kubota was my doctoral dissertation supervisor about 20 years ago. Professor, I have, again, like Danielle, I have 2 questions in one, and probably 2 very distinct questions.
Mm-hmm.
One of the reasons that you refer for the need in countries like Japan that probably retail CBDCs are disputable needed is geopolitics. You refer to the need to stop in China, to be like European Union and the US. And also there was some mention when you talk about Cambodia issuing currencies in dollar denominated of the internationalization. So that brings the first question, whether you think there is a particular or necessary role for international cooperation, even international institutions, in either setting a standard or straightforward regulation for these at global level, at least at main countries level, G7 or G20. That is the first one. And the second one relates to international cooperation, but in a completely different area, and refers to what John Taylor's question. There is a movement towards assigning liability to even private companies for climate change issues. And some of these developments you are mentioning will have or are having potentially environmental and climate change issues. And the question is whether you see that this could hamper, I mean, this will be a collision between the 2 movements, the development of CBDCs and the movement towards protecting the environment and the climate.
That's a very...
Sorry, before I give the floor to you, this was also the question of John Taylor. He was also asking, and so you can answer to John Taylor, will your research also look in detail at ESG issues? And so you can answer both to your former student Fernando and your colleague John Taylor, and with that will be our final question.
Understood. Yes. Please. I answer to John. Okay. Thank you very much, Fernando. And I finally understood the last comment of the bill of the environmental power issues. And thank you for teaching me about some ESG issue or some climate change issues. So actually the CBDC of the cross-border CBDC is not developed so much, but just began to develop. So the international standardization or some the soft law consensus building will be in a will be started in not now, but a little bit later. But that is very important thing. And that is a difficult question. But the Japanese Bank of Japan has not so much deeply involved in the climate change, but other central banks in EU or UK is much so involved. So the central bank has both the CBDC and climate change. So there should be some coordination of the to protecting the climate change and to promoting the CBDC can be an issue, and also the climate change or CBDC cross-border should be international. So there is a need to inter-talk with these 2 areas, and I totally agree with Fernando. Yeah. I'm not sure what Fernando thinks, but if the Fernando proposing the issue is I agree with it. It's very important.
Thank you very much. So I think that with this, we have completed what is a fascinating session. I'm sure we could be talking for 2 more hours because it's one of the defining issues of our days. And you very well put it now at the end in your concluding remarks, how these issues touch upon the agenda, for instance, that central banks have these days, and the competing demands on multiple objectives. One of the issues that is currently being discussed as part of the inquiry that the House of Lords is conducting is precisely this: to what extent the primary mandate of a central bank with regard to price stability and financial stability gets compromised, or do central bankers get distracted when they have also to look at other considerations, whether it's the digital agenda, whether it's the green agenda, or whether it is further crisis management instruments that are entrusted to central banks just because they're effective institutions, raising all issues of legitimacy and accountability. So your presentation is not only very timely and important when it comes to the area of CBDC and digital assets generally, as I said, one of the defining issues of our time, but also in the context of a challenge that our societies face these days, not so much in Japan, but certainly in the UK, US, and EU, with their rising inflationary expectations that questions, what central banks should do and not do, and the status of independence. And as you very rightly point out, the need for accountability, not only accountability to the legislature, but accountability to the public in terms of explaining. So thank you very, very much. I just want to say that I enjoyed thoroughly the presentation, the discussion, and the questions. This will be recorded, so we will have the opportunity to listen again, and you've made very kindly your slides available. And I look forward to continuing to see you at CCLS, as well as in the discussions in the House of Lords, and in due course to your book, which I'm sure will be a fantastic contribution to the literature on these themes, and certainly a very original contribution from the perspective of Japanese law. So allow me to give thanks to you in the customary way, which, since we're not in person, we can either do like this or put the emoji clapping, and I'll see you all very soon. Thank you so much. Bye-bye.
Thank you very much.